Good morning, everybody. I hope everyone is having a wonderful morning. It's about 5:30 a.m. Central Time as I speak here this morning. Joe is gone today. He will be gone the rest of the week. So I have Brian Split joining me. Brian, how are you this morning?
I'm here, Mackenzie. How you doing?
I'm doing great. To start off with, the Trump administration is expected to announce a farm aid package this week, totaling between 10 and 15 billion dollars. However, the government shutdown stands in the way of congressional approval for the bailout, and existing funds may be insufficient to cover such a large payout. During his first term, President Trump allocated more than $23 billion in assistance to help farmers offset trade war losses. Even before this new aid, U.S. farmers are set to receive a near record government payments exceeding $40 billion this year. So, of course, this has been a divisive topic for some time now, and we've been talking about it for quite a while. But, Brian, what are your overall thoughts around this bailout and now the situation with the government shutdown standing in the way of it moving forward?
Right. So bailout good, bailout bad. I think you could talk about that quite a bit. And I know you and Joe have spoken extensively about the possible ramifications of it and how it might affect producer behavior. I think overall, this particular set that they're speaking about in this article is to get producers through the harvest season. So this is more of a short-term type of a bailout, if we want to call it that, to get the producer through the period here, especially if prices are low. And I think they're maybe recognizing that the way things panned out last year, we had a lot of producers sell bushels out of the field at what were pretty low values compared to where they were a couple months later. And so I think the administration wants to kind of get this short-term period taken care of, where if there's producers selling bushels out of the field, especially at a loss, that those bushels have something attached to them to try to make the producer whole. Now, I think Joe and you have done a really good job of going through the first MFP program and how they facilitated that. And I think that's really the only framework that we have to go off of on what to expect for this round. So, hopefully we get something out of the administration as far as an actual decision here. As far as the government shutdown and how that affects it, I don't know. I know there's certain things that are still going to be pushed through, but I would like to think that if they're setting the expectation that this could be announced this week, that they have the ability to push it through regardless of the government shutdown or not.
Right. Hopefully, we receive some kind of news. The USDA's weekly crop progress report was not released yesterday, of course, due to the ongoing government shutdown. In the absence of official data, analysts estimate that the corn harvest is about 30% complete, up from 18% the previous week, and soybean harvest is projected to be roughly 35% complete, compared with 19% last week. Dry conditions have aided soybean harvest, with many farmers finishing beans and moving on to corn. Looking ahead, dry weather is expected across much of the Corn Belt this week, which should allow harvest to continue at a strong pace. With the exception of Ohio and Kentucky, they are forecast to receive substantial rainfall. Temperatures are projected to remain above average throughout much of the region. What have you heard from some of your customers in regard to harvest pace and then also potential yields?
Yeah, the harvest of soybeans is coming along rather rapidly, and it just seems like over the last several years, the producers made an effort to get the soybeans planted quite a bit earlier. That has proven to show some improvements in overall yield. And I think the idea that we are pushing through soybean harvest, to me, that's what my clients are calling about, is the bushels that are coming out of the field that they don't have the ability to store on farm. They're letting those bushels go. We're finding some type of a call position to put on paper. And I think most of the concern from the producer side is, I'm recognizing that the basis stinks right now, and the price isn't the best either. So the combination of two is not advantageous. The only way to see improvement in basis, unfortunately, is to hold on to the physical bushels. And if you don't have the ability to do that, the one thing that I think a lot of producers really don't want to miss out on, if it does come to fruition, is a rally from a trade deal. And whether that comes to fruition or not in the short term, we can debate that. President Trump and Xi Jinping aren't going to meet for another month here, for several weeks. But I think that is one thing that they don't want to miss out on. And number two is, we do have a South American growing season coming up here over the next several months. We're going to be planting and then going into their weather market. And if La Nina comes back, that could have some impact. So that seems to be the main focus on the soybean side of things. And I would say overall, soybean yields do anecdotally seem to be better than corn yields. There are concerns about the later planted soybeans and how the yields there may hold up compared to early planted soybeans. But that's something we got to get through that last part of harvest to see what those numbers look like. As far as corn goes, it seems like there are bushels that might have been marketed a couple months ago on the idea that they would not be able to have on-farm storage. So I think a lot of those bushels, now producers are telling me, you know what, I may not have needed to sell that. I might have on-farm storage for that. And that would suggest that those areas, the crop is actually smaller than what they thought it was a couple months ago, maybe even just a month and a half ago. And I do have a lot of producers that are telling me that the corn crop is a really good corn crop. It's better than APH. But I would say more often than not, they are telling me it is not as good as last year, or it is not a record on their farm. Now, there are producers that are saying it is their best corn ever, but I would maybe say it's, 2 to 3 out of 10 versus 7 or 8 out of 10 that are saying, yeah, it's a really good crop, but not record and maybe not their best.
U.S. corn shipments were near the upper end of pre-report expectations last week and also notched a marketing year high. USDA reported that 63 million bushels of corn were inspected for export during the week ending October 2nd. The print was up 4% compared to the previous week and up a whopping 69% versus the same week last year.
Nice.
Very nice. Very impressive. Soybean shipments were also near the upper end of expectations at 28 million bushels. The print was up 26% compared to the prior week, but down 53% versus the same week last year. The lack of soybean purchases from China is becoming increasingly apparent and is likely to intensify in the near term. And lastly, wheat shipments, they were reported at 19 million bushels, down 43% versus the previous week, but up 38% compared to the same week last year. Overall, what are your thoughts on these shipment numbers, particularly corn continuing to be pretty darn strong, and then soybeans starting to reflect the absence of China in the market?
Yeah, corn inspections were credited yesterday with bringing futures off the lows when those were released, and very solid number. I think those the corn's going to be a little bit more resilient here as well if we start we continue to talk about the water levels, the river levels, because the corn is railed to Mexico, and as Mexico continues to be the big buyer of corn, it just takes away that concern about river levels in order to get the product moved out of the country. So the demand from Mexico, especially as we're keeping animals south of the border and feeding them there, we're going to continue to see very good exports, and the pace that we have obviously is phenomenal. So there may be a point here where if the pace continues this way, the USDA may be forced to acknowledge that they might have to raise exports on the balance sheet in the short term. Now, granted, they will be reducing the feed residual on the balance sheet at the same time, but I think knowing that feed number is overstated as much as it likely is, it's really good to see the export pace continue the way it's going to help hopefully bite into the reduction in feed demand on the balance sheet over time. On the soybean side of things, I mean, geez, that's the departure from last year is glaring, and obviously we're in that prime window to export soybeans. Basically, October through January is that time frame when the beans leave the country, and we've missed the October. We feel like Argentina's probably covered the November window for soybeans after the purchases that we had last week. So it's just a really rough go there, and that's something that we will likely see the exports on the soybean balance sheet further reduced whenever the USDA gets around to it and we have reports released. Wheat sales are good. Not as good as last week on the inspection side of things, but overall, our wheat export program is running at a very good clip.
On to South America. Brazilian soybean planting is progressing at a rapid pace. According to well-followed private group Ag Rural, as of last Thursday, 9% of the crop was planted, up from 3% the prior week and 4% at the same time last year. The current planting pace is the second fastest on record for the date. Ag Rural also reported that planting of Brazil's first corn crop is 40% complete, compared with 37% last year. The current planting pace is the fastest since the 2012-2013 season. Planting for both Brazilian beans and corn is off to a strong start. What's your take on the fast progress? How much is that adding to the bearish tone in the grain markets?
Well, part of it is that weather is allowing them to plant. We've seen previous years where it's so dry in Brazil, we have to wait till it rains to get some of the crop planted. So that's not the case this year. But the other part of it too is there some obvious intent there? If I'm Brazil, and I know that China, my biggest customer, does not necessarily want to buy U.S. soybeans, and they'd prefer to buy my soybeans. I'd want to get them in the ground as early as possible, to get them harvested as soon as possible, so that I can come right in as early as possible with the new soybean crop and feed that to China. So I think they're very well aware that the sooner they can get the beans out of the ground, the better it is for them.
A bit more on Brazil. Trade tensions may be easing with the nation. Following a phone call on Monday, President Trump and Brazilian President Lula da Silva agreed to meet in person, potentially later this month. The call focused on economic and trade relations, with Lula requesting the removal of U.S. tariffs on Brazilian goods and sanctions on the country's top officials. President Trump's recently imposed 50% tariff on Brazilian products has impacted key agricultural exports, particularly coffee and beef. If Brazil and the U.S. can reach some kind of a trade deal and Brazilian beef imports go back to the levels that we saw during the first half of this year, do you think that will have much of an impact on the cattle market?
That cattle market is just wound so tight that anytime there's something that is news counter to, the overall bullish sentiment, you could see some very quick and sharp drops in values, just from a pure sentiment standpoint. And I like the idea because, it's when you think about the cattle market, right? It doesn't trade overnight, and then it opens up at 8:30. So it's kind of dealing with whatever news happened from the previous day's close. And so, what this article does is it links together two commodities. It links together beef and coffee. And now coffee does trade overnight. And so I think it's going to be one of those things where, keep an eye on the coffee market, because if there is any policy change with the administration as it relates to tariffs on Brazil, the coffee market will likely show it first in the night session. And the coffee is another market that has been wound extremely tight and seen some really strong gains. It's been a very strong bull market for the last several years. And so that's another one where, if you start to see some chinks in the armor in the coffee market overnight, and again, it's got to be due to policy and not something like weather, right? So that's not conflate coffee being down on a changed weather forecast and think cattle is going to be down. But if you start to see some more traction as far as reducing tariffs on Brazil, and you see the coffee futures down overnight sharply, that might be an indicator that the cattle market's going to have a lower open as well.
A bit more on cattle. Another case of New World screwworm has been confirmed about 170 miles south of the U.S.-Mexico border in the Mexican state of Nuevo Leon. This marks the state's second confirmed case in the past 2 weeks. According to USDA Secretary Brooke Rollins, this new confirmed case is isolated and unrelated to the previous detection in late September. The news, of course, bolstered cattle futures yesterday, as the border is expected to remain closed for the foreseeable future, keeping feeder cattle futures tight. Feeder cattle supplies tight. What are your general thoughts on this cattle market?
I think the cattle market obviously knew about this before the headline actually came to fruition. And, when you just look at the timestamps of when the news hit versus when all the buying occurred. So, again, it appears that there was somebody that knew that this was going to be announced prior to. We've seen this pattern before, right? You're up sharply one day, you find out what the news was that drove you higher, sharply higher. We'll probably back off today now that we know what the news is. What were we up a little over $6 yesterday? Probably see part of that come off the top today. In general, the way the cattle market looks to me, and we've talked about buying coming in at the beginning of the quarter and potentially being the beginning of a new leg higher. The things that we need to watch on the cattle market technically are the 50-day moving average, the lows during the month of September. And if we start to break out above what would be what I would consider the short-term downtrends of the last month of consolidation on both the live and the feeder cattle, if we take out those downtrends, that will look like a breakout to the upside, and then we're going to really be looking for the upside objectives based on kind of a bull pennant formation on both of those. We'd be looking for those upside objectives to be met, but we got to break out to the upside first. And to me, the charts still look positive. So I think you're going to need to see some bigger picture news really take the wind out of the sails here in order to get this market to break down.
Alrighty, that sounds great. That is all I have for you guys this morning. Everyone have a wonderful Tuesday. Brian, thank you so much for joining me. We will be back tomorrow.